Welcome to the Anchor Your Retirement podcast. I'm your host, Barbara Gullen. Gosh, Tony, it feels like I haven't seen you in forever.
Yeah,
Hanging
I've
out with
been
my co
busy.
host, Tony Shore, of course.
Yeah. Well, I've been busy. I was the week before, I think I was in Columbus, Ohio. And
Oh,
then
really?
I just got back from Chicago, um,
I am
where,
jealous of this trip, by the way.
yeah, it was, the first regular season game for my Minnesota Vikings. And it was on
And
Monday
the
Night
Bears.
Football.
Mhm.
And a friend invited my wife and I to the game and bought us tickets, lower level, 50-yard line, right behind the Vikings visitors bench. Loved it.
I saw your social media post on that. What
Yeah.
a
Yeah, great seats and a
fabulous
great
place to
view.
sit.
Yeah. And I'd never been to Soldier Field, but I have a funny little story about it that I think our
Okay.
listeners will enjoy before we jump into we're going to talk about interest rates today, and that's very important. But Barb, before you get into it, I want to tell this little story that's I found my wife and I'm still laughing about it, but so the Bears dominated the first half of the
They
game, and
did.
I'm there with a
I
Bears
had hope.
fan. It was a hardcore Bears fan that invited us, and he knows I'm a hardcore Vikings fan, so we give each other a hard time. But there were quite a few Vikings fans there. You know, it's a 5.5 hour drive from where I'm at in Minnesota to Chicago, so we drove.
Not bad.
And it's really downtown Chicago's great. It's a lot of fun, and it's right on the lake. I mean, Shed's Aquarium's right there, and I love
I
it down there.
know. I have so many pictures from Shed when I was in high school, but we
Fun.
digress.
Yeah, that's
Digress.
fun. But anyway, the way that stadium is set up, when the game is over, so they dominated, but then we came back to win it. So the Vikings win it. So then you have to walk on these paths through the park and under tunnels to get out of there. There's no
Mhm.
parking right there. So
'Cause
everybody's
there's buildings there.
unlike most stadiums, everybody has to walk and over half of it, half go one way, half go another way. But you don't split up. They're all walking on this path to get out of the park.
Mhm,
So it's like up onto the grass, and the path is covered and thousands of people, right? But
mhm.
it's really quiet because the Bears lost, and it was a brutal loss at the very end of the game. And
Uh,
the Vikings fans don't want to cause trouble. We're all Midwest nice. So the Vikings fans are just silently fist bumping as we pass each other or see each other because we're wearing our Vikings gear. And the Bears fans are all quiet. It's depressed. And you don't hear a lot of laughing or talking. And then we're in a
but the
tunnel.
Bears are used to leaving Soldier Field that way, let's be honest.
Oh, you had to poke. But that's
Well, I'm
what's so
from Chicago. I'm not poking. I'm
yeah.
just
But
assessing what it is.
what is so funny is it was quiet, and then all of a sudden someone broke the silence by starting a chant. Packers suck. Packers suck. And you had 20,000 plus people all walking together, and they all started chanting. So, and
Because
it
you
was
can all agree on that.
yes, I think it was a group of Bears fans that started it, and then all the Vikings fans get excited. So the Vikings and Bears fans are together chanting the derogatory chant toward the Packers.
Well,
And I thought that was so funny. It was so great. It was perfect.
you it's nice. Okay. In light of everything that has happened in the world in the last 24 hours,
Yes.
because we are recording this the day after Charlie Kirk was
Oh,
assassinated.
terrible. Yeah.
Um, it is redeeming to think that even if it's just coming together over not liking the Packers,
Right. It
that
brought us
people can
together.
come together over something.
Yes. Yeah.
One of my team members reposted something on social media this morning that said, if you really want to honor 9/11, act like you did on 9/12.
There you go. Yeah, there you go. That's a great quote. That's awesome.
Yes,
Because the whole country, the whole world came together
we
on
did.
the day after 9/11.
We did.
And if only we could get back to that spot. And it's sad though. We don't want another tragedy to have to
No,
do
we
it.
don't.
That's the problem. And just like this Charlie Kirk, it's just another tragedy, and we've had so many lately. I'm from
Mhm.
Minnesota. We had 2 politicians assassinated here.
Yes, yes,
And
and
we had
the
2 deaths here, and then another couple victims on top of it. But just terrible political violence on both sides, and so
yes.
that has to stop. And poor
Mhm,
Charlie Kirk, he had 2 young children,
mhm.
just beautiful family. So whether
Yes,
you agreed with what he said or not, you don't shoot people. Um,
no, I
you know?
mean, and Ronald Reagan used to fight with Tip O'Neill. They would fight like cats and dogs,
Yep.
and then they would turn around and they would go out to a bar and share a
Yep.
drink together
Yep.
and
Yeah.
figure and we as a nation owe it to ourselves to come back to that sense of camaraderie where we can have ideological differences and have conversations about it that don't
Yeah.
end in shameless violence.
Yeah. Agreed.
Yeah,
Agreed.
because the people in Minnesota that were assassinated were on the other side of the political spectrum. So this isn't a right or a left thing. This is
Nope. It
unfortunately
isn't.
a
It
human
is.
thing at
It
this
is.
moment.
Yeah. Terrible.
So,
Terrible. Yeah.
by the way, I really like the way the shirt you chose to wear today. It really quite complements mine, and with the background that we have now,
Yeah.
it's just perfect.
Yeah,
So,
I thought so. We got pink in the background. You're wearing a light pink shirt. We've got the turquoise or whatever you call this, aqua blue in the
mhm,
background. So yeah, it works.
yes,
Right?
and for those of you that are listening and not watching on YouTube, go over to our YouTube
Oh
page, and
yeah.
this part of the conversation will make sense.
Yeah.
So,
It will.
but
What about rates? So you said you wanted to talk about interest rates, and all I've been hearing about the last couple of days is how the Fed is definitely going to lower interest rates coming up here in a few days.
I would say there is a very strong likelihood that it's going to happen. When I don't have control over it, I don't like saying it's a definite thing.
Sure. Yeah.
Okay. But if you look at how the bond market is pricing things, the way the bond market is priced is showing that the federal interest rate, the federal funds rate, is about 75 to 100 basis points or 0.75% to 1% higher than where it should be right now.
Hmm.
Okay. So at some point, and I understand why Chairman Powell has not taken the rates down yet. Unfortunately, with all of the political rhetoric going on, I think if he had done it, that there are people in the executive branch that would have said, "See, I told you so." And the Fed's job is to be nonpartisan. I don't know if you've ever noticed this or not, but when Chairman Powell gets up and speaks, do you know what color his necktie is?
What color is it?
It's purple.
Oh yeah, red
It's
and
not
blue
red
make
and it's
purple.
not blue. Red and blue make purple.
That's great.
So, he has been put in a pretty difficult situation. And when we also look at the fact that the Bureau of Labor Statistics went back and revised the number of jobs created over the last year, and they revised it down by over 900,000 jobs.
Yeah. Yeah.
Which, while the stock market has been blowing and going gangbusters, and
Yeah.
remember, the Magnificent Seven is growing. When you look at how NVIDIA is growing, do you know who NVIDIA's clients are? It's Meta, it's Google, it's all of those big tech companies.
Yeah.
Your company does well when your customers need more of your product. But the behavior of the stock market, even though it's a the stock market isn't always an indicator of what is going on in the country as a whole.
No.
And this is
No,
a
you
really good example of that. For the last 18 months, maybe even 24 months, people have been saying it's harder to get a job. It's, things are getting more expensive. I talked to a client yesterday that was like, "Do you think it would be possible for us to increase our monthly distribution and not impact our overall plan? Because things are getting more expensive around here."
they really are. Yeah. Well, and they just released the August inflation numbers were increased. I think it went
Right.
jumped up to 2.9. Um It rose at a rate of 2.9% in August, which is, it rose.
Mhm.
It always rises, but did the
But that's a
amount?
year-over-year number.
Yeah, yeah, it
You
is.
know, it's not 2.9% from where we were back in 2021 before everything went
No,
nuts.
no.
That's 2.9% from last year.
Yeah, yeah. It didn't go down. It never
No.
goes down. It should, but it doesn't. Yeah,
Well,
yeah,
and when it goes down, then we have other issues going on economically.
yeah, yeah.
But
Oh, that's true. Yeah.
all of that to say that it is very likely that we are going to have a rate cut in September and probably at least one more this year.
Okay.
Now, the interesting thing will be to see whether they are a quarter point or 25 basis points or 50 basis points. I think if they are 50 basis points, that means that they are far more concerned about the economy than they have spoken about publicly.
Hmm. Yeah, yeah, there's economic indicators that with the jobs and the inflation that would
Mhm.
say, things aren't headed in necessarily the right direction. There's no need to
Right.
panic as of yet, but
And I
um
think the stock market has priced in a quarter point reduction, the 25
sure.
basis points. I think if we have a 50 basis point drop, that we will probably see a correction in the market, which we're a little bit overdue for anyway.
Yeah,
And
we've been hitting
September,
record highs, so we'll have to
yes,
see where we go.
yes, and September trends over the life of the S&P 500 to be more negative than positive.
Yes.
I think it's like 56% of the time the stock market is negative. So it's still, kind of a coin toss there, but trends more toward the negative.
Yeah, October, November are usually rough for the stock market.
And September,
And
yes.
yeah, September, October, November, yeah. Especially September and October, yeah.
Yes. So
Yep.
all of that to say, we're looking at a cut in interest rates coming.
Yep.
Things to do. Number
Yeah,
one,
so what does that mean? If they
if
do go down, what do we do, Barb?
if they do go down, first of all, if it's a quarter point, it's probably not going to impact you all that much yet.
Especially right away.
Right. If you are in a CD or some sort of savings vehicle, maybe
Mhm.
even a MIGA, a multi-year guarantee annuity,
Yep.
and it's paying a decent interest rate, and they give you the opportunity to renew at that same rate, you're going to want to do that because as interest rates come down, the amount of interest that you're going to be able to earn in your high yield savings accounts, in those CDs, in the multi-year guarantee annuities, those are all tied to the Fed funds rate. So as that rate goes down, the amount of money that somebody is willing to pay you for the privilege of holding your money is going to go down.
Yeah.
And when
Yeah,
you
it's
boil
gonna
it
go
down to
down.
its essence, that's what interest is.
Yeah. So CD rates are gonna go down probably. You're probably not gonna get an opportunity to, at least when my dad had a CD and the rates dropped, then when it came time to renew it, I want to renew. Well, it's not going to be at the same rate you had. So
Right.
yeah,
Right. So
it's going to
don't
be
be
lower.
surprised. It's not the banker's fault. They're not doing
Well,
anything
no.
unusual. They are
Yeah.
just doing what they normally do.
Yeah.
Um, the good news is if you carry a balance on your credit cards, that interest rate is probably going to drop a little bit.
A little.
A little.
And
Um,
eventually.
eventually. Well, yeah, those are usually a little bit sooner rather than later.
Oh, are they? Okay.
But what I want you to think about is that probably over the next 6 to 9 months, they're going to bring the federal funds rate down at least 1 percentage point. And a lot of that will depend on, like you said, those external market conditions. What does unemployment look like? What does inflation look like? What are we looking at in terms of tariffs and trade and all of those things that play into that and the overall health of the economy?
So the first thing you said to do, if the interest rates do go down, maybe the thing to do now before they go
Right.
down is lock in the higher rates in
Mhm.
your safe money options like a MIGA, something like
Mhm.
that. Hopefully, you can lock them in for a little while. I know that if there's looming, usually they won't let you go start a new MIGA or a CD right now and lock in a higher rate for a very long period of time.
Right. However, a qualified fiduciary or somebody who works in this space more consistently
Yeah,
is somebody who can help you find those options that are out there.
right.
Some companies will try to hold out as long as possible before they drop their rates.
Yeah, that's true. And so you want to try to take advantage. What else do we need to do when rates go down, Barb?
We need to continue to pay down our debt because on those variable rate accounts, like your credit cards,
Yep.
when the rates go down, if you keep that payment the same or keep paying that little bit extra, you're actually paying more toward the principal and cutting down on your overall debt. And further, you're compounding the reduction in your interest
Okay.
payments by doing that.
So get that debt paid down, especially
Mhm.
where you have variable rate or yeah,
Right.
adjustable rates. Pay it down.
Yes. And the other thing you're going to want to do is if you bought a house last year or the year before as rates were going up, now might be the time to start looking at whether or not you can refinance and come in at a lower interest rate.
Yeah. Yeah, after the rates go down. Yeah,
Right.
if the rate on housing mortgages goes down, maybe look at refinancing. That's a good tip.
Yes.
Yeah.
Yes. And the other thing to do is to understand that this is part of the normal business cycle.
Right.
Most of the people listening to this podcast don't remember what it was like. Ironically, before September 11th, 2001, we were already in a recession when that happened. And the events of September 11th only threw us into a deeper recession. And that's when the Fed stepped in and started drastically cutting interest rates to work to
Yep.
keep the economy afloat and to try to keep us from going into a depression. So there are a lot of, especially younger adults out here who think that the interest rate increases that we've seen since end of 2021 into 22 are uncharacteristically high when in reality they've been normal. We're a little bit on the high side now and need to
Mhm.
swing it back down a little bit,
Yeah.
but this is the normal space that interest rates live in.
Yep.
So, along with that, when you are doing your projections for savings and what kind of interest you're going to earn on those safer money vehicles, understand that this lower interest rate is more the rule rather than the exception. Was it great a few years ago when we could get I bonds that were paying 9 and 10%? Absolutely.
Yeah.
But that was situational.
Yes,
And
very.
if you look at the fact that I bonds were paying 9 to 10%, it meant that we were almost in that we were in an inflationary environment, and that was not good for the economy overall.
No. No, it wasn't.
So, it's modulating your expectations and understanding the ebb and flow of the business cycle and the stock market. My suspicion is that next year is going to be a volatile year for the stock market. The midterm election years in this century have trended that way.
Yeah.
And when we throw in all of the other political things that are going on right now, whether it's the trade wars with the tariffs or individual states going back and trying to redraw their district boundaries to try to skew the election one way or another, the more uncertainty there is, the less the stock market likes it, and the more people pull back and would rather have that money sitting in cash than actively moving and grooving on the market.
Yeah. Yeah, that makes sense. So, you have to look at all of these things. It just sounds like you need to talk to a trusted financial services professional, someone like yourself and the team there at BG Wealth, right?
We have a fabulous team here,
Yeah.
and all of our advisors are very, very client focused. The fact that we're independent means that I don't have, and neither do they, have somebody telling them that they have to hit a quota, that they're limited to a certain product, that they're restricted on what they can and can't say to a client in terms of offering advice, and looking at them and telling them, if you've got a CD paying 5%, I'm not going to tell you to give that up
Yeah.
because you're not going to have one for long. So you might as well ride it out
Right.
and enjoy it while you can.
Sure.
It's, we have, at the risk of sounding a little bit mushy, a heart centered approach with all of our clients, and working with them and figuring out not only where they are financially, but what their dreams, plans, and aspirations are, so that we can work to help them achieve the financial side of that and try to build in those safeguards in case something, there are hiccups along the way all the time.
Yeah. Yeah, there are, and so you have to have a plan that can adjust to those and work with somebody who knows what to look out for, and you've been doing this for so many years, helping so many people in the community,
Mhm.
with this. So, Barb, how can our listeners out there get a hold of you if they wanna set up a no charge, no obligation, with you and the team there at BG Wealth?
They can go to our website, bgwealthmanagement.com, and go to the contact us page, or you can always call us at area code 913-553-6222. Select option 4 for appointments and scheduling, and Christina or another member of our team is going to get you on the calendar so that we can work with you and help you figure out what works best for you.
All right. Well, Barb, thank you so much. What a great show today. So important to know what to do with
Yes,
when interest rates go down. There are some steps you need to take, things you need to be looking out for, and especially work with a trusted financial professional
that's
to
what we're here for.
get a plan in place. Right?
Yes,
Yep.
yes, because if you don't have a plan, you have a wish.
There you go. Yeah. And if wishes were fishes, I'd have me some. That's my I don't know, my mom used to tell me that. I wish we could do this today." And then she'd say, "If wishes were fishes, I'd have me some." I don't know why. I don't know if that
Well,
even makes
that's
any sense.
well, it's a much gentler one than what my parents used to say.
Oh, we're not gonna say it on the show.
No, no, but the punchline is which one weighs more? So
Oh, okay. Yeah, my mom, I remember as a kid, "That's not fair," or I wanna be able to go do this, and we can't do that." "Well, that's not fair," and she'd just tell me, "Life isn't fair, son."
nope, it isn't.
That's how I
It
grew up.
isn't.
Life isn't fair, son. So, oh, my mom was so funny. All right.
Oh,
All right. Well, Barb, great show today. Listeners and
thanks.
viewers, thanks for tuning in. That does it for today's episode of Anchor Your Retirement with our host, Barb Gullen.
We'll see you soon.